welcome everyone back to another DeFi Raiders AMA. My name is Relentless. Today I'm talking to Alex and Kurapika from Factor Dao. DeFi, they're bringing you the building blocks for DeFi asset management on Arbiter. I'm super excited to talk to this project. They got a lot of exciting things in the works. So thanks so much for joining us, guys. You want to go ahead and kind of introduce yourselves and give a little background?
So joined up with the guys about 3 months ago. They've been working on it a lot longer, but I'll let him tell the story. So yeah, I guess just a bit on my background. Like basically, I've sort of been in crypto since 2017. Mainly trading, do a lot of my own kind of algo quant stuff in the background. Also done a fair bit of angel investing and sort of advisory for projects. And actually wanted to build my own vaults to run my algos on chain on, GMX, DYDX. And so when originally Kurapika reached out to me to talk about Factor, I was just super excited about the idea, started helping, got really sucked into what they were doing, got on with the guys really well. And it's just been like absolute pleasure the last 3 months. So very excited to see this all come into fruition and getting launched soon. And I guess we'll talk about that. I guess outside of crypto, I sort of spent the last 15 years launching and scaling media and tech businesses, got a couple of exits there. So yeah, I'm kind of like a BD, marketing, scale up type guy, and that's the role that I play at Factor.
Awesome. Yeah, my turn. So yeah, that was Alex. I'm Kurapika. Outside of crypto, I spent the last decade working on fintech products, specifically indices and creating different insight products for government officials, venture capitalists, and hedge funds as well. Been doing this, as I said, for a decade. In 2016, I found out about Ethereum, lost my mind. And in 2017, I saw the Wild West of ICOs and decided to open a research firm that basically does the same thing that I did over the years on private and public companies, only with decentralized elements, basically the decentralized protocols. So we created a proprietary rating system that we are soon to embed in some way or another in Factor as well. We'll get to it in a second. It went well. We had 20 analysts on the team until the bear market of 2019 hit. I went back to advising some DAOs and protocols until about 9 months ago, I met my current partner, which is Shortcall, which is not here, but we started working on Factor. Been doing this as a duo for about half a year before meeting Alex and started scaling in terms of traction. And now I'm proud to say we're a team of 11 in Factor and launching in about a week.
Very cool. Yeah, a ton of different experiences there. And I was going to ask how big the team is, but I appreciate you answering that. So a lot of people working there. So very cool. Yeah. So let's kind of dig in here. Don't want to waste any time getting to the meat and the bones. Would you guys like to just kind of give like a TLDR kind of high level overview of what Factor is?
For sure. I'll take it and Alex, you can add on top. So basically Factor as a tagline would be a liquidity middleware or a one-stop shop for all DeFi access. So we've built an infrastructure that allows any type of strategy, whether it's passive or active, to be integrated and created on top of a no-code platform and be delivered directly to anyone that wants to get exposure to. So practically speaking, in terms of what Factor is showing is an interface where you'll have two different pages. One would be the create, and using the create, anyone, whether you're an individual, a protocol, or a fund that wants to create a strategy or a structured product, goes into the create wizard, chooses the name of the vault, the description, which is practically speaking the methodology, the ticker, because basically any type of vault is tokenized and it's then tradable. You go in, you choose the composite of the assets, whether it's equal weights, customized weights, or any other instruments via the partnerships, integrations, or vaults that already been created on Factor. You wrap it up, move to permissions and fees, which basically you determine what type of fees you want to charge from anyone who gets exposure to your vault, and as well the permission side. So basically, if you don't take permission, it's fully permissionless and moves into the discover page that we'll touch on in a second. But there's also the alternative to choose a permission vault which has different gates to it. One could be a whitelist. Let's say you're a provider and you want only certain wallets to get access to the vault or the instrument that you created. And the more advanced one would be the full KYC. Let's say you're a hedge fund and you want to create a full compliant product on top of Factor. You can create a gated vault using a KYC, and this way Factor is only the infrastructure that allows you to facilitate it. So as we mentioned, once you choose the permissionless aspect, which is not gated, it moves into the Discover page. And the Discover page could be looked at as a database of all strategies created on Factor. But we don't just want to have it as an endless, 5,000 vaults that it's a Wild West and nobody knows how to access the right type of strategy that fits him or her. So we're enabling this another risk management layer that incorporates different metrics, whether it's on-chain or off-chain, with performance and fundamentals, to really allow the risk profile to be defined in the right way and really allow whoever wants to get exposure to an instrument to understand what's behind it.
So did you guys mention that you're governed by kind of the ERC 4626 standard?
Yeah, I mean that's it. So I think like Kurapika gave a good summary overview, and I mean so I can expand on that and explain how we're using that standard to differentiate a little bit.
That'd be awesome.
Because I think like obviously you do have like these predecessor or other kind of on-chain asset management solutions out there. But basically the problem that we're trying to solve is that, DeFi is pretty early stage and fragmented. So to actually execute any kind of complex strategy is quite challenging, and probably beyond the scope of most people. But even if you know what you're doing, it's quite siloed protocols, technical barriers, complex user journeys, all this kind of stuff. So, to build on Kurapika's point about building this like infrastructure and liquidity layer for DeFi, the way that we've gone about that is by taking the ERC 4626 standard, which is basically like a vault token, but modifying it. And that means that we're able to support a much wider range of assets. So, you might have seen your typical vault out there, which is just like an index. We can do that. So you can create a vault that is just a tokenized basket. But we're going to have a lot more flexibility so that you can create yield pools or lending markets or also derivatives. And so this is where this like building block concept comes into play, because what you can do is then even combine, a tokenized basket and a yield pool for yield aggregation or liquidity, or baskets and derivatives for some hedging strategy that you might want to run. And we've got some like interesting examples we can maybe talk about later, but yeah, that's basically how we're doing it. And so essentially what that means is that this will hopefully be like, to my mind or to my knowledge, one of the first kind of on-chain asset management protocols that enables you to do anything that you want to do. So it could be as simple as running an index, but in the future, because we do have a phased rollout of how we're doing this, in the future, you could even run like a more high-frequency trading strategy on futures using algos or bots or whatever you want to do. So yeah, whole range of options, and the modified ERC 46 is kind of the slight innovation that we brought there that makes that possible.
Yeah, very cool. So you guys got some features that you mentioned: the tokenized baskets, yield pools, trading derivatives. I don't want to dive too much necessarily into the tokenized baskets, because I think that's, kind of generally understood. But for your yield pools, which are super customizable, you guys have a couple different options there for permissionless and permissioned. Do you want to kind of talk about what the thought process is there, and then, who that appeals to, what crowds, why you kind of chose permission and permissionless, and what options there are for investors there?
Sure thing. Yeah, I'll take it. And again, Alex, you can feel free to cover. So basically, I'll start with the general use cases. Okay, so basically, first you have the strategists. And the strategists could be individuals that have their own portfolios or their own strategies that they're currently implementing. For example, Alex just mentioned he wanted to create a vault even before he knew that Factor exists, and to deploy his algo trading features. So basically, it caters to these individuals that want to monetize their strategies and basically create an on-chain track record. It could also cater for funds that wants to create the compliant aspect, and this is why we have the permission pools. But a very interesting use case would be for treasury managers, because a treasury, by essence, is somewhat of a strategy. It's more risk averse because it utilizes the funds from the protocol, but you can then go and tokenize the treasury as is and allow other DAOs to get exposure to the strategy you designed as, let's say, a successful treasury manager. And of course, you have the investor side, which allows anyone to get exposure to what would be a complex strategy otherwise, and maybe they had to interact with lots of different protocols. I mean, for example, myself, I think I just did my taxes. I think I interacted with, I don't know how many contracts, tens of thousands of transactions. And I had to go through 50, 100 different UIs just to play around with some yield generation applications. So instead of that, Factor enables everything to be handled in one single place. And to be honest, I mean, for us, like we mentioned, the liquidity middleware, for us, it was very easy to go and discuss with different partners. Right now, we're launching on Arbitrum. So we already have, I think we announced already 6 different protocols that will be integrated both as a Vault partner, as an integration as well, to enhance the features and the customized Vault options for the creators and the investors. So if you're now an investor, you can go into Factor and get exposure to all your different DeFi protocols in one single place.
Yeah, super cool. Yeah, and I think you guys are kind of, from what I've seen, you guys are the first project that offers, you know, we mentioned the derivatives and being able to hedge against positions. I think you guys are the first that I've seen that offers that option to be able to, you know, open a yield pool and then also hedge against yourself in the same, on the same platform, unless I'm mistaken.
Yeah.
Well, it's not even about yourself. Let's say you now got exposure, or you saw on the Discover page different yield aggregation pool, different products, right? Different vaults. And you think you found a great strategy, but you think that you can make it delta neutral or more risk averse by hedging it yourself using derivatives or adding another element to it. It's open basically. So you take one offering or one strategy that is already embedded and you improve on it based on your needs.
Yeah, I was just gonna add on that, because I've actually got a very good example of that. Bit of alpha actually. I mean, we're gonna like announce this shortly anyway. But yeah, I was on a call earlier with Lyra, who do options, and then CVI, who've created basically what's like a VIX, you know, volatility index for crypto. So we're talking about creating a vault between the three of us working together, which basically enables you to kind of go long or short on the options and then hedge that with the volatility, long or short, using the CVI token, which basically enables you to create this kind of delta neutral yield. So it's like a type of product that like just doesn't exist yet, which we're like Factor is enabling the creation of that, which then means that these two protocols are creating a really interesting new use case for their products. Which is great, because it's like that's the point of Factor, is to create these new instruments and evolve DeFi and make it a little bit more, I guess, sophisticated, but also whilst it's sophisticated, it would be easy to access, because these strategies are kind of hard for the average person to execute themselves. So that's great for us to showcase that on the platform and the potential of what we can create. It slots very easily into the infrastructure that we're building. It's actually not going to be that complex for us to execute. But the beauty for partner protocols is that it kind of, you know, it creates this new use case for their products, which creates a kind of more diverse ways in which they can be used. And it also like just drives TVL to their ecosystems, because we're like kind of agnostic about who we work with, which is great. And we've got really good feedback from everyone we spoke to, because like for the reasons I've just outlined, it's a service that's going to help to kind of supercharge their products. So we just take the deposits into the vault. which is like RTVL, but then the contracts execute the vault strategy, which could be like, you know, buying options or making a swap or whatever, that is just basically pushing that volume and TVL into our partner protocols. And so that's kind of where we see that we can be the heart of Arbitrum DeFi. And, you know, in an ideal world, one day, if you want to do anything with DeFi on Arbitrum, you can come and do it on Factor. And instead of like competing or hurting the other people in the market, it's actually just pulling everyone up together and creating this real hub for DeFi on Arbitrum at first, but also in the future, obviously have plans to go multi-chain as well.
Yeah, it makes a lot of sense. I mean, I think there's an argument to be made about how Arbitrum might just kind of become the hub for DeFi anyways. And all the great, the great projects and great builders are launching there right now. So, being able to come on there and launch your project through kind of a one-stop shop that has a ton of liquidity, and bringing all that liquidity together to, help people work together. I know you see some projects that obviously want to, keep their liquidity native and stuff like that, but that has its own kind of issues. But being able to bring that all into one space and do it all in a one-stop shop is huge.
Yeah, I mean, there's actually one interesting point on that as well, though. So I think, like we said at the beginning, just sort of seeing ourselves as this like infrastructure or kind of software as a service model. Like we have also spoken to other protocols who do want to keep stuff on their DApp or on their front end, which like I understand that. Like obviously for us, it's beneficial to host stuff on Factor and kind of have that one-stop source. But we are also going to have the option for people to just plug into our infrastructure to build these vaults and then host them on their front end if they want, using SDK. So that's an option, and sometimes that makes sense if people run like closed communities and they want to have their own vault strategies within their communities, or a protocol has a particular desire to try and promote what they're doing on their front end. Like we understand that. Like it's cool to have everything on Factor, but we kind of make fees and make revenue regardless. So open to those options as well.
Yeah, and it's a good point you bring up there, or good that you mentioned the SDK. I think that's something that's not really utilized properly. So do you see this as a kind of software that's going to drive that adoption?
I mean, I hope so, yeah. And I think it's on the roadmap. So it's something that we might work with one of our partners with earlier on. But yeah, I think it's a bit of a chicken and egg thing, right? Because like the whole battle, I understand why people want to keep things internal, because, there is competition in various sectors and DeFi is quite like fragmented, which is like this problem that we're trying to solve. But also I understand why people want to do it, because they got to grow their own TVL and their own communities and create their own moats and, fight off the competition. But like, I think we're in the enviable position where we don't have to worry about that. We can actually facilitate that for people. I would say like the grander vision is that we do want to be this like infrastructure and liquidity layer. And ideally, right, like if you take like GLP, for example, like obviously it's pretty cool, good yields, like people are building all kinds of interesting strategies and trying to really fight for the best yield. So you could imagine a scenario in the future where you could come onto Factor and say, okay, I want exposure to some delta neutral GLP yield. I just want to find who's got the best yield and, the track record, and maybe, what looks like it's got the most TVL or looks the most secure, whatever criteria you have, you could just come onto Factor and filter and find that, right? Which I think is a reason for stuff not to be siloed, because it just, for the user's perspective, it makes it a hell of a lot easier to find the thing that fits your strategy and your risk levels and, the best yield. But what I also hope is that with like products and solutions, like I was talking about with the Lyra and CVI thing, it will just spur on new kind of innovation, because people will be competing and they'll have to kind of drive forward and come up with new products. And I think that's good for the end user.
Yeah, I completely agree. And so aside from, the retail, the options to retail users and builders that are, kind of native to DeFi, we know we talk about, products that we need to build to drive mass adoption from institutional investors. What kind of interest have you guys seen? And I know you guys have a plethora of experience on the outside of DeFi. What kind of attraction have you seen from institutional investors for a project like this?
Yeah, I want to take this, and Alex just pop after. Basically, so when we first thought about how we take this to market, there was obviously the institutional element, because this is where the real liquidity stands. But realistically speaking, in order for us to be working in a pragmatic way, we first wanted to really approach the DeFi native audience in order to understand the intricacies that are needed in order to create this fundamental infrastructure. Now, we mentioned the permission side, and this is something we want to enable from the get-go. And we already have some interest in terms of different funds and more institutional to your end entities that would like to create it. Now, it obviously takes more time because you need to work with the compliance elements and to really make sure. And obviously, you just need to launch the product first. But to your end, I mean, we are first working on the fundamentals. And then once this is secured, we really want to start using our own networks and the others that are already approaching us in order to deliver this more mass adoption approach. And mass adoption, by the way, it doesn't necessarily have to be the institutional side. But when we think about mass adoption, especially with protocols such as Factor, we really want to find a way to cater to not only the institutional side, but the retail, which is external to DeFi natives. So obviously it's not a short-term roadmap, but to really allow people to start using Factor, or again, any kind of alternative solutions. It's not just about Factor, but really about maturing DeFi as a whole, to bring forth the option to use DeFi protocols as you would use with your saving accounts, which basically just allows the bank to rob your liquidity. And this is what we do with DeFi, right? We take liquidity and we bring it back to the people.
Yeah, very cool, very cool. Yeah, I mean, the whole reason that I got super interested in Factor when I found it was just the opportunities to bring, you know, the ability to bring the value back to the users and for the mass adoption. And I think it's like just a kind of a great, you know, overall architecture or / infrastructure that could really do this for and benefit really everyone kind of equally. So very cool. And then so just kind of a last kind of touch here. So for you know, anyone who wants to build on your platform or anything like that, or host a pool or anything like that, what kind of fees will they be looking at to use your infrastructure?
Yeah, I guess I can take that one. So yeah, it's a good question. So basically I'll run through a few bits. So basically, if you like how you can make money as a Vault creator is, I think I mentioned at the beginning, but you can set up a management and performance fee. So like, you know, it could be like a traditional hedge fund model and sort of 2% on assets under management or TVL and 20% of your performance, your profit. So that's how like you could make money setting up a Vault, and you can customize that and set that how you want it. Like how the protocol makes money is in a number of ways. So I think an important point is it needs to be scalable, right? So that if we are speaking to institutions, it's attractive. I know one of the complaints with some other asset management protocols is that the fees, the slice of fees that they want to take is just too high for it to be palatable for larger scale. So we do take a cut on the management and performance fees. But there's a couple of things. First off, we do it on a sliding scale so that if you're a small player, like, yeah, you're going to have to pay to be involved on the higher end of the scale. The more TVL you start getting in your Vault, then the fees start reducing. We are actually also going to have the option to totally eliminate at least the performance fee side of it by staking a certain amount of Factor, as VE Factor, locking that up. So actually, just to touch on that, so then before I get onto that, the other thing that we're doing, if we're reducing the fees for the Vault creators themselves, but obviously we still need to make revenue. So like we're kind of passing the fees on a little bit down the chain for the convenience of using the platform more or less to the users, where there'll be like a very small 0.3% deposit and withdrawal fee and a 0.1% fee on any swaps that happen inside the Vault. So there's kind of a multi-pronged approach to generating revenue. I mean, I'm like massive on this, and so is the whole team of like bringing, you know, real world business experience and business models in here. So you could kind of make this a bit more analogous to like a, you know, software as a service model, or almost similar to like a payment provider with transaction fee model. And so where does that revenue go? Like, we are going to be a DAO, we're going to be decentralized. So by the Factor token basically plays a role in that. That does a few things. You basically, like, if you're familiar with Curve, similar sort of but modified VE tokenomics. We have got a fixed supply, but we have got, you know, some emissions for rewards to kind of bootstrap adoption early on. And basically, yeah, you can lock up your Factor for VE Factor between 1 and 4 years, you know, for getting boosts on what you will receive. And what you receive is a share of 50% of protocol revenue and governance rights. The other 50% of the revenue goes to the DAO to operate the DAO. We have quite an interesting structure there with our main DAO and some sub DAOs that will be covering some pretty exciting areas. And then, yeah, obviously you get the governance rights, like I mentioned. And the reason that might be interesting is because, like, you know, we aim to, like I say, create competition on the platform and incentives. And so much like you have like curve wars, it could be well advisable for protocols or whales or large individuals to try and acquire VE Factor so that they can direct emissions to their vault, or, you know, set things up in a favorable manner to them. That said, we put a lot of thought into it to make sure that there is some kind of anti-whale mechanisms for like decay on the VE Factor, and also just in terms of the game theory behind, you know, people will only want to do stuff that is generating revenue for the protocol because that will be generating revenue for them. So yeah, sorry, kind of covered a whole load of areas there actually, but hopefully that all made sense. And yeah, Kurapik, I don't know if you got anything to add on that.
No, it was perfect. It was perfect. Yeah, DeFi Raiders, the stage is yours.
Yeah, that's actually a great answer, because it kind of, you know, I was going to tie the fees into the tokenomics, and then my really only question about your tokenomics was how much of those fees are going to go back to the VE Factor holders and the DAO and all that. So you kind of covered it all in once. So yeah, I do like your tokenomics. I think 15% team fee is, like, you know, a perfect sweet spot for the team too, to keep you guys incentivized and pay you, you know, pay your worth as well. So I do like that. And then the 50% back to the VE Factor holders is, you know, based off potential revenue, which I guess we'll see once you get the test net upcoming and see how those things are doing, will be a lot, and great incentive to, you know, keep the protocol healthy.
Yeah, and 100%. And we've like mapped out revenue models and everything. So obviously we'll see how we go in the public sale in terms of what runway we have. We've got a pretty rigorous like forecasting model in place. And I think also, just because you mentioned it, it's important to say that the team tokens are vested over 24 months, over 2 years. The treasury is emitted over 3.5 years. I can't speak on behalf of the other guys, but to be honest, like, I already thought there's like interesting stuff that I could do with my own Factor in terms of locking it up and creating vaults, like VE Factor vaults on Factor itself, where you can do some interesting stuff, collateralizing it and generating yield on it. So yeah, anyway, that's just a personal thing that I'm kind of interested in, as to how I can use the platform myself with my own tokens. So yeah.
Yeah, and I just want to jump in and add on this, because basically, so we wanted this, we had this idea for Factor, right? And we could take different approaches, and most solutions currently are closely, if not fully, centralized. And in order to enable a fully decentralized element, we basically took the fees and said, okay, 50% goes back to the stakers, which enables obviously less sell pressure and more involvement within the governance of the protocol. And the other 50% goes back to the treasury, meaning the team doesn't pull anything. So what Alex just mentioned, like, hey, I want to create a vault, is something that we see almost as natural, because once the DAO is fully functional, the team is just converted into being another, I guess, leading, but another working group within the sub-DAOs. And I would expand on the hyperstructure that we've built basically for the DAO, but you can imagine it somewhat like different departments within organizations. Each and every one of them are fully autonomous with their own specific treasury in order to get their goals in line.
Yeah, awesome. Very cool. And then since you kind of touched on it a little bit earlier, Alex, I kind of want to ask, you said you have kind of a unique structure for the DAO. Do you kind of want to talk about that?
Well, yeah, I say
I'll
he's
go wild.
Kurapika's our governance expert, so I'll defer to him on
Perfect. Yeah. I'm super intrigued about, new approaches to governance because, not a ton of people have gotten it perfect. There's been some that have been, pretty good. So I'm super interested in what your guys' idea there is.
Completely. And I mean, I couldn't agree more, especially like in this DAO area. I've been around for 7 years, went into DAOs, I think 2 or 3 years ago, and started researching and try to see what kind of experiment we can put up in line that will be sustainable, seamless, and actually efficient, because some DAOs are efficient, but the others create more mess than they're supposed to. So we took an approach that basically is utilizing what is called governance mining, and this is the reason why we have 50% locked for the treasury reserve. Some of the people, once they first see it, they get stressed. Like, what is this 50% tokens? Where are they going? And the whole point here is to create an aggressive incentivization method, which is not based on APY for anyone that's staked. The purpose here is to create the hyperstructure, I'll talk to it in a second, and basically fully incentivize contributors to make sure that the DAO scales not based on the core team. So we could just scale the core team endlessly, but we don't believe this is an efficient approach to bring the DAO to life. So I'll just quickly overview this hyperstructure. So basically, governance mining, meaning that we're developing an array of sub-DAOs. A sub-DAO could be R&D, the treasury management, or the asset management. So basically, the treasury council will be included in that. It could also be any type of arm that is utilizing efficiency within the DAO. So one of the biggest things that we decided to implement, which I think is unique, we have a specific sub-DAO that its entire purpose is synergy and coordination. So let's say you have the R&D DAO, and you have the treasury DAO, and you have the risk DAO that basically wants to go and put on all the risk management elements on top of the platform. So the sub-DAO that is in charge of coordination and synergy makes sure to find those working groups and make sure if there's correlation, that they're working together and not competing with each other, because we want to maximize the efficiency of which the contributors are working in.
Yeah, that's super interesting. That's I think maybe the most multifaceted approach to a DAO that I've seen so far.
Thank you. Yeah, the head of governance of Aragon liked it around a year ago when I presented it.
Yeah.
But yeah, we're excited. It's still an experiment, obviously, but we are putting whatever structures in place to protect the initial implementation in order for us to be able to grow and adjust accordingly, because we never claim we know everything. We want to allow the initial draft or the initial governance elements, and it's true for the protocol as well, for that to be upgraded by the community, which are much more efficient than a team of 10, no matter how good they are.
Yeah, and it's and you've got different kind of factions of the governance too, that allows them to focus specifically on those areas and not be too spread out trying to make too many decisions at once, So
correct. And then, by the way, just to touch on that, like we've created another model for I'd say a hybrid voting mechanism. So the main DAO has its own one V token per vote thing, but for the sub-DAO, we created something like Gitcoin, which is quadratic voting, which creates more specific implementation of these groups that are working for a specific cause. So it creates much more efficient voting system that can be implemented and worked upon with these sub-organizations.
Yeah, that's awesome. I'm excited to see that kind of play out as this progresses. Because this is definitely, from my perspective, from the things I've seen, the most kind of unique governance model so far that I've seen. So I'm pretty pumped to kind of partake in that as well, and then see how it plays out. And then kind of back, Alex, to what you were talking about with I wanted to touch on it real quick, and I kind of skipped past it, but the ability to take the V factor and make pools out of that and bring extra incentive, ways to make liquidity, or to, bring value to the governance while still keeping the protocol healthy, I think is super unique as well, as opposed to just, being able to sell it on, your V Factor, your locked stuff on a secondary market, but being able to put that in a pool and bring extra revenue to yourself. There's like three different or multiple different ways there that you continue to bring value from locking, and not just protocol fees and voting rewards.
Yeah, definitely. And I like to think that we and other people have learned the lessons from, the last bull run, where there was like really good innovation, but obviously a lot of emissions, and it was all great when everything was going up. But then everyone, as is the way with crypto, we all learn the hard way, when the market turns. So I believe we've got a sustainable model, but it's my general thesis, not just for like Factor, but for the whole industry in DeFi, that, it's all about Ethereum scaling. Layer 2's really picking up. They're going to enable a whole load of new things, and people are innovating on them. And it's got to be focused on legitimate business models. And, personally, and this is why I got on so well with these guys, is that all of us are trying to build actual proper revenue and business models that we've worked on and been successful with, outside of crypto. Because now it's much more, it always should have been, but now it's actually much more applicable to DeFi, in my opinion. So the idea would be that it's not just some token that obviously people are going to buy and sell tokens and whatever, that's fine. It's the market, it brings fees and liquidity and stuff like that, but it doesn't have to be the be all and end all, right? If you're building something that's actually a successful, scalable, growing business, generating revenue and cash flow and profit, then there's incentive to stay within that ecosystem. And I think the only other thing, slightly on a different topic, but you mentioned about that, I don't know if we covered it, but one of the interesting features is that if you create a vault, so it doesn't have to be Factor or VFACT, it could be any token, right? Like what you get is the vault receipt token, the ERC 4626 token, which basically actually behaves like an ERC20. All it means is that it's representing your share of the vault. So it's actually possible that people could create secondary markets or find uses for the vault tokens themselves. So you could imagine a scenario where you put some USDC into a vault to generate yield in one way, and you get, your vault token that is representative of that vault. And that may, you may then be able to create another use case or secondary market, or use that token in some other way, because it is liquid as well. So I think those things will take some time to play out, and it's not something that necessarily we as the protocol would build, but let other people kind of, build on top of it or come up with their own ideas or markets for it as well.
Yeah, a lot of different and intriguing kind of things that could play out from this. Because kind of the way I'm looking at it is that there's you could really end up having the vast majority of your token supply locked, which would obviously truly, create sustainability, but the incentives are actually there to lock the majority of that supply, knowing all the different things that you could do with it.
Yeah, I just want to add to it, it's not even about the functionality, but once you actually enable the V Factor to be accumulated, and you're focusing this on the community, the achievable aspects of the DAO, you're creating a staked approach, which is not only helpful for sell pressure, which is obviously great for Factor, but it allows the V Factor, or the majority of Factor tokens, to be directed towards the most involved members of the community. So it's a double advantage. You get the staked tokens, but the ones that are staked are utilizing their efficiencies and their skills in order to further help the DAO, and it's a self-feeding process.
Yeah, very cool. All right, so let's kind of transition just a little bit to a couple of the other things that you guys are doing. One thing I think is super cool is the Factor Open, is this kind of trading strategy with the vaults, or baskets and pools and different things. You guys kind of want to talk about that, because it's super intriguing.
Sure. I'll give a quick overview. Just a disclaimer: this is not for the initial launch, but it's a feature that basically enhanced trading or gamifies trading in a way that can be not only fun for traders to do, but actually efficient for different interesting use cases. And I'll touch about it in a second. So basically, Factor Open or Factor Leagues. Factor Open is just a league created by the DAO, But we look at it, the original idea came from fantasy league, like in football, DraftKings, for example. So basically anyone can go submit a strategy based on the league creator methodology or definitions, and then they compete with each other for factor incentives or incentives created by the league creator. Now, who is a league creator? So Factor Open is obviously something very similar to leaderboards or other competitions within trading, but the permissionless side of someone going in and creating a competition or a league is mostly based for whatever need that the protocol or fund has. So one very simple use case would be just to revive or extend trading volume on a native token of a platform. So let's say you're a protocol right now and you want to extend your awareness and the volume on your token. You can create a league that makes requests of the creators to include 20% of this as the strategy. So they can hedge it, they can do whatever they want, but 20% needs to be on the native token. And another very interesting element is what we call basically asset management outsourcing. So let's say you're now a hedge fund and you go into Factor and you create a league. You can now use this as somewhat of a talent acquisition competition where you define your test, which is strategy creation, and the top whatever could then be filtered into an interview or actually just directly in a non-custodial way send some assets to be managed by them. So again, assets outsourcing or talent acquisition.
Yeah, very awesome. I like the gamified aspect of it, and then also the talent acquisition is a huge thing, because that is, how just the possibilities of the type of people that you could bring onto Factor DAO to help kind of drive the growth and development is huge. And without having to go on some extensive type search, right? They have the reason to come to your platform, and you're able to kind of get the introduction to those people. It's definitely a lot that you guys can do with that there. And a way to bring on, more and more traders. I know Alex and I had talked a little bit about that previously about, trying to bring great traders on. So it's definitely an incentive for them to come there as well and benefit and open up opportunities for themselves. So, all right. So cool. Let's kind of transition just a little bit. One thing I did kind of want to ask about was your guys' approach to you're doing I don't know when you're going to launch it or whatever, but you guys have talked about a grant program, which I haven't seen so far with the project offering their own grant program. Do you kind of want to talk about like the options there for people, or what you guys are kind of looking at there?
Sure. And again, I'll mention this is not something planned for the initial launch, but because obviously we need to make sure there are grants to bring, but it's very much natural for a project that is embedding an infrastructure to allow different grants to be given in order to supply incentives for other teams to build on top of Factor. So it could be from the elements of risk management. As we said, we don't want just to have this databases of vaults that are endless, and you as an investor or someone that wants to get exposure to these strategies are getting lost, because then we didn't achieve anything. You could just go and get lost in a different protocol. So what we want to have is this embedded management layer, like risk management layer, that will be on top of Factor and will allow anyone to access different ratings and performance metrics that will enable them to take a more educated decision regarding what they're exposed to. So that's one side of it. It could be strategy creation, vault creation. There's lots of different elements that can support and build on top of the infrastructure that Factor created. So the grant program is basically meant for that. You mentioned that not many different protocols are doing this, but there are some. For example, it's still not comparable, but hey, we're coming, Uniswap. So Uniswap created their own infrastructure for swapping mechanisms, and their own incentives is to create to allow anyone to build on top of it because they're agnostic, right? They want more swaps and more volume to their protocol. And Factor isn't that much of a different, because you can then go and create a vault and embed it within your own UI. Like, we are, in the future, will enable a full white labeling solution with an SDK, because Factor is agnostic as well. It just wants to drive more volume and liquidity into the platform.
Yeah, makes a lot of sense. I mean, whatever, all those options to bring different value, and there's, if you're going to mimic some things that Uniswap does, there's nothing wrong with that. Obviously, everyone knows how successful they've been, and allowing people to build on top of that only makes them more successful. So definitely a good option for you guys as well. It's just cool to hear like all the different angles that you guys are approaching from a project perspective, not just with your initial launch, but how you're trying to move forward and grow this into such a massive thing. It's super cool. It's super well thought out, and obviously, especially for such a small team, to be addressing this many different aspects is super cool. So.
Thank you. Thank you. Yeah, we've been working on this for a while now. I mean, the 9 months, they didn't go like just for development. We had to focus on the financial models, we had to focus on the launch models, and we had to focus on the governance models. And the more we work in the back end, the more successful we can make the launch and the product. Because the more you have answers, and again, I'll be the first to say we don't have all the answers, but we're trying to attack and to research all the different facets in order to allow a wide array of fundamentals to build upon.
Yeah, makes sense. Very cool. All right, so let's kind of get into some of the kind of things that people want to hear about here. I know you've got the testnet coming up, what kind of incentives are going to be from the testnet, and then also if you want to talk about the public sale, because you guys have an actually well thought out, real fair launch, if you kind of want to break that down and when people can expect to see those things.
I guess, I can take this one then. So yes, we've got a pretty busy short-term roadmap. So we're getting our docs out, should be tomorrow. They're written, we're just proofing them. That gives a lot of the information that we talked about today in terms of fees, revenue model, governance, all of that sort of exciting stuff. We're then aiming to get our beta test live around the 19th, at least. So, and we've got, I think Arabika mentioned, we got thousands of people in that channel on the Discord. So we want to give people a feel for the product, and see it in action, which will be quite exciting. Because obviously people want to see real product, and so do I. Can't wait. We actually just got the audits back as well, so we're just finalizing a few things there, but there was no issues really. So pretty much audited now, which is good news and on schedule. And so, why are we doing that? Is just really to make sure that we're well prepared for the public sale. That is running on Camelot from the 20th to the 24th and is basically open to everyone. So the intention, and I'd sort of caveat it with that, I just don't think there is a perfect model out there. So we're trying to find the one that we think is the best. And strangely enough, we were actually talking about a similar model before we knew about Camelot, and then we saw it and we saw how well they were doing. And so it was just an obvious move to do it there. Massive shout out to that team as well. Just great guys, doing really well, very supportive, and just a pleasure to work with. So the way that that's going to work is that there's a floor price on the token of 0.1. We're selling 10% in the sale. So that's 10 million tokens. So what then happens is that when the sale opens on the 20th, people can deposit into the sale contract. They can do that at any point throughout the 5 days that the sale's running. And the calculation of the token price is simply the current amount raised divided by 10 million, number of tokens. So people will be able to sort of look at it and evaluate. And obviously it might be increasing a little bit as the sale goes on, and they say, okay, maybe this valuation is too high for me. So just to clarify, the starting valuation is 10 mil, fully diluted valuation at the 0.1 or 10 cents floor price. But then let's say we get to a certain price at the end, that will decide the final price that everyone gets. So whether you put the money in at the beginning or the end, it doesn't actually matter. Like, you'll all get the same price at the end. And the reason for that is, we've seen like copper or fjord and stuff like that, and people trade it and they get different prices. They trade it in and out, and there's often like, people getting different prices, which is like, you could argue is like not fair, I guess. I mean, trading and life isn't fair, I guess, but we're trying to make it as fair as possible. And some of the reasons for that, like, so there's no hard cap. I mean, you can make a debate about that, but really the logic is that we're putting it in the hands of the people, and it's up for the market to decide like what the final price should be. People will either deposit or they won't. But there's also some benefits to that. And there was a sale the other day that kind of experienced the sharp end of this, unfortunately. But, if you put a hard cap on, like, obviously bots are going to be running wild and people are going to get upset, and you're probably not going to get a very nice distribution. But also there's very little incentive for that because everyone gets the same final price. So you're not really getting an advantage by getting in early. So yeah, that's how that's working. And then we're seeding the pool pretty much like, I guess, within about 24 hours after that, more or less, with Camelot. So it'll be on Camelot. It's USDC that's needed to participate, as well as, some ETH for the gas fees, obviously. And we'll be doing a USDC Factor pool. The idea is to put a substantial amount as well. Another good thing about this is like, we'll be able to put a substantial amount of the raise to the protocol own liquidity, which should give it, a nice thick liquidity and hopefully give us a stable base from which to grow on. So yeah, that's that. And then I think, like, obviously this is all timed towards the release of the product, where we'll have like the product live for basically the end of the month. I'd like to say that it's like planned for around the 27th. It's just like things can happen and just need to make sure everything's right, but that's the intention. And to clarify on that, that'll have like the staking live. It'll also have our own like Arbitrum indices live that we're doing to basically show MVP like what the product can do. I mean, we're not like going to be in the habit of building a load of our own strategies. Like I say, we're making it available for other people to build strategies. So, but we will launch these initial products, and it'll more or less look like we're discussing at the moment, like 5 volts, maybe like it would be like DEXs, derivatives, options, lending, and yield, or something like that. They'd be like the top most liquid protocols, obviously. So there'd be some criteria around the weighting and the volume required to be in the vault. We might even create like a vault of vaults, fund of funds sort of thing with all of them in. Another cool thing we just agreed with Camelot is to do like a round table vault as well. So like an index of the more liquid tokens that are part of the Camelot round table partnership. So yeah, then we'll be up and running. And then just to conclude, what you can expect in March is we've got like, I think 5 or 6 partners confirmed already. I literally just looking at my notes of what I got to do today. I got like 7 or 8 more. It's been a very good day today, to be honest. 7 or 8 more, including some very big ones and some very interesting ones. So we'll be spending March basically doing the partner integrations and partner vaults. So there'll be the next phase of vaults that are rolled out. And then in Q2, we'll be moving into like the open create mode where anyone can come on and create a vault. So, sorry, yeah, like a bit of a long one, but like just ripping through like how the public sales working and the immediate roadmap to the end of Q1.
No, perfect. Answered everything that was left about partnerships, and the roadmap. So I appreciate it. And I have to say, I agree with your approach of modeling Camelot's kind of fair sale, because anyone who bought into that early is obviously extremely happy and thrilled with the way that went. So, and also a great project to partner with. I mean, everybody knew the caliber of that team from Excalibur. They couldn't do anything. The Terra collapse wasn't their fault. So to see them come back even stronger and come up with something great on Arbitrum is no surprise there. So obviously says a lot about your team as well to be partnering with them. So it gives a lot of confidence there. So
cool, thanks.
It's really, congrats on how far you guys have gotten and getting close to your public launch and everything. I'm super excited for you and to see how this progresses. So if that was kind of it for my questions. The things that I wanted to talk about, if you guys, have any final words you want to put out, we'll let you do that, and then we'll wrap it up.
Yeah, I mean, just thanks to you for having us on. I enjoyed our chats when you reached out to me originally and some of the intros that you made for me. Very much appreciated. So yeah, great questions. Thanks to the audience for tuning in. We're always pretty available. I mean, we're busy, right? But we've got some great community members, and other people in the Discord as well. So we do try and like answer any questions. Obviously, we get asked the same questions quite a lot of times. So please do read the information that's provided and then come and ask the questions. But yes, we're happy to answer questions and looking forward to getting this sale running and getting the product launched.
Excited. Thank you so much. Thank you so much for having us. We just want to have Factor launched and have you all involved.
All right. Thanks so much for joining us, everyone. Really thankful for your time and support. Hop over into the Factor DAO socials to get involved and stay up to date. If you're hearing this now on YouTube for the first time, please hit that like and subscribe. Once again, I'm Relentless from DeFi Raiders, and we'll see you next time.